Hey, we are here live. Mr. Hammer, how are you, sir?
What's going on, Mr. Nathan? I am fantastic. How are you?
Good. Yeah, really good, man. Really good. So, what a week it's been. What a week we're looking forward to. I don't know where people find themselves this week in the nation, but North Texas, I'm going to be high of 70s and low of 35 almost every day, and that's sunny, which is kind of crazy for me growing up in the Northwest. You didn't get a lot of sun during the winter, so this is
Mhm.
really nice. I like it.
Yeah. You get some chilly nights there, but it does warm up quite a bit during the day.
Yeah, got something to look forward to. So, well, we're going to dive in. We were just chatting kind of before we started this that in this Vetivier group, we are starting to see a lot more questions pop up saying, well, what are rates going to do? Or is the bubble bursting? Is the market crashing? Is, you name it, we're asking it. And those are all, they're good questions, but they're questions from a place of not actually probably having a lot of insight or understanding about what's happening in the marketplace currently and where it's going. And I really am engaged and happy to have you with us on this, Hammer, because we talk about a lot of good stuff week to week. Walk us through. What do you got for us today? What do you got? What do you want to talk about this week?
Well, if you don't mind sharing the screen, we'll do a quick recap on what happened to rates last week. Last week was a doozy, caught a lot of people off guard. We'll talk about that. We'll talk about where we think rates are going this week and maybe for the next couple of weeks, even. So, go ahead and get this to move one slide. All right. So, quick recap. Let's talk a little bit about what happened last week. Rates continued to worsen, which did upset a lot of people. Mortgage rates last week, they moved higher. A lot of it happened when we got the inflation report that came in the middle of the week, and we knew that inflation is an issue. We've talked about this in the past. So inflation, a lot of what we're seeing now, you can ask a room full of economists, why are we having inflation, and you'll get a room full of different answers. But what a lot of people do agree with is that because of the pandemic, we had a situation that the government was put in a place where we created stimulus. And that stimulus basically is an overabundance of money now in the system. We've printed money and that money is being spent. So there's very strong consumer demand. We've had some issues with supply chains, meaning that we're not getting goods coming in. And again, it could be any or one, any one of these or all of these reasons that we've seen a very, very strong surge of inflation.
And sometime time out. I'm sorry I'm late, but to
Hello,
interrupt you,
Christopher.
sometimes it's completely random, like avocados. Some guy threatened some guy, and now avocados are more expensive because we're not importing them from Mexico at the moment, right? So
Yeah.
sometimes it's inflation is weird. It happens for different reasons.
It does, but one thing that we can definitely agree on is that it is happening, and both say energy costs, gasoline, right? Gas is getting more expensive. Food costs, food has gotten to be much more expensive. So all of these things are definitely inflation, and the Fed has to deal with that. And we're actually we saw the largest jump in inflation that we've seen in about 40 years, and that was last week. And what that did is it put everybody on notice that hey, we know the Fed's going to have to take action. The next time the Fed is expected to take action is going to be in March, and we thought that that was going to be maybe a quarter point increase to the Fed funds rate, which is kind of the universal rate we've talked about before. We'll touch on again in a minute, but it's a lot of people now are saying, that quarter point doesn't look big enough. We need a Babe Ruth swing. We need them to get up there and hit this thing home run, and they need to maybe take this to a half a point. And that would be something that I don't even know if we've ever actually seen the Fed start a tightening cycle, because this is something that has happened before, and in cycles. It happened back in 2000, and the Fed did raise rates by a half a percent, but they did it after raising them by a quarter point and by a quarter point. So the belief that the Fed is going to go out there swinging and the first time up to bat is going to just take it out for a home run, look to maybe do a half a point. That's a big expectation, and that's got markets reacting and preparing for that to happen, because you say, Hammer, well, the Fed funds rate, you said that this meeting is going to be in the middle of March, so why is this such a big deal now? It's only in the middle of February. But the markets are always trying to react aggressively before that actually happens, and that's why we're seeing all of that right now. And the expectations are that the Fed is going to have to go ahead and really come to bat. And in fact, there's a particular Fed member, his name is St. Louis President Bullard, who thinks that we need to see interest rates go up by a full percent, not just mortgage rates, but the Fed funds rate by a full percent within the first couple of months, maybe by the June meeting. So there's a lot of belief out there that amongst investors that, hey, inflation is a big problem. And if the Fed's going to look to head this off, maybe they should have done something a little sooner. And now they're going to be forced to do something very harsh. Some people even talking about, maybe they won't wait until the middle of March. Maybe they'll have an emergency meeting. That's still very, very, very unlikely.
So,
But
that
yeah,
said, so first of all, if you're watching this or you're listening to this and you're hearing, oh gosh, they're making and moving up and changing, like don't let it like give you fear, because there is a lot of thought on this. And tomorrow we're going to have another guest on, a guy named Logan. I said guy, a really cool guy named Logan, who's an economist, and he understands and he actually follows St. Louis Fed's tracking, as many others, to anticipate, and he has a very good success rate of anticipating likely occurrences. And so I'm going to pick his brain around some of these things, but I think that it probably is a good thing to get in front of inflation. And I think the bigger fear for me would be if they're doing enough to slow down the economy, right? Because those actions can cause that, but doesn't get in front of inflation. I think that's the bigger fear that people need to be concerned with. Not to say you should be fearful of it at all, but as far as things that you're being, paying attention to, or that should be informing you. Like, I think we'll see what Logan's opinion on some of that is. But I think that just to point out, like, don't let it rock you one way too much or the other. Like, they have a job to do. I think that with inflation being where it is, they need to be doing something. It's getting pretty nuts.
Yeah, absolutely. And, Christopher, one of the things I think we should touch on is the fact that we're in a rising mortgage rate environment. And what does that actually mean? It can be very scary sounding. And we all have this experience where we don't necessarily want to have missed out on the best. Hey, the best rates happened. I don't want to miss out. If I'm still out there looking for a house, now my interest rates are higher. That means I'm going to pay more. But what's 100% interest? Rent. Yeah. Renting is 100% interest. So I've told the story before.
Well,
maybe
correct me if I'm wrong too, though, but as these change and go up, so do dividends and interest-bearing things that you have money investing in, and compound interest is more valuable for you to achieve than offsetting every potential cost that it might take to achieve. Because a house that you own free and clear, ladies and gentlemen, still has costs, taxes, insurance, maintenance go on forever, and there's not a currency that exists that pays them off completely. So the point is, the compound interest also, or the additional interest gain on other instruments that you may have and own, could likely benefit you in different ways too. So double-edged swords, like most things, right, Hammer?
Absolutely. And not taking the emotional winnings of a home out of it. I mean, when I say winnings, I mean, there's just something to be said for, I can hang a picture anywhere I want. I can move a wall anywhere I want. And I can paint this color, any color I want. That's the emotional winnings of a home. But from a financial side, interest rates have gone up, but look at what equity has done. The amount of money that people have now in wealth created from these homes that have appreciated. And even if we do see a little bit of pullback over our most immediate future, you're still 5 years, 10 years, 15 years from now. What do you think the chances are of your house being worth any less than they are today?
And I think there are a lot of members, I don't know if there are any of them on the live right now. A lot of the members that are here may have been familiar with some of the content like 4 or 5 years ago, back when I was belting it in several different veteran groups out there on what I thought would occur with the poor and the middle class, specifically with net real estate wealth gained over the next 5 to 10 years, 2-3 decades, like of growth in certain areas that I think it's realistic to bet on. And I told plenty of people to. And I think that many people did. It wasn't some unique thing. No crystal balls, right? Nothing like that. But it's not hard to anticipate the places where growth will occur when they involve massive amounts of humans moving, doing things for them to occur. So don't let the daily stuff, the Fed discussion, the mortgage bond rate, don't let those things scare you. Allow them to inform you. Smile, grit your teeth, and place your bet, because it's true that a home may be the best financial investment you may ever make. But I promise you, after bumping around for years with my family, with daughters, with not having a place of our own, with repairing everything constantly because we were terrified we were going to upset a landlord, my family, like, my home was one of the best ways I've ever invested in my family. We had chickens in Colorado. It was great. It made us a killing, that house did, right? But we had chickens and we had meat chickens and like all of these things. Like we had bears too. Another story all aside, there's actually a story there for anyone that might be in Colorado that ever heard it 3 years ago. Rough one. But there's something really cool about what a home does for a family outside of the wealth creation that the data proves perfectly, right? It's more than that. And so I think that gets at the why behind why isn't the market going to fall off? Well, there are a ton of new people that have to have houses. They're having families. Like, how many of y'all want to live at home with mom and dad and 3 kids with you, but you're in the basement? You don't want to do that for more than 6 months. I promise. Maybe temporary while you're looking or searching, but it's not a place meant for you to stay. You should always be pushing to chase for better things, and you shouldn't let the fears rack you and control you over what's driving your choices, right? I think that's probably the biggest takeaway. And always shop, 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 shop. Like so many of y'all worry about rate here, worry about this change here, but how many of you actually take the time to shop with 3 different types of companies that originate or do the thing, work with the thing that you're asking them to? Shop and get different opinions on it, because that's the best way for you to ensure yourself that you're informed. You don't have to just accept it blindly, which we do not in any way ever encourage. Sorry, that was a little long.
That's all right. That's all right. Well, speaking about shopping, a couple things as we've shared before, make sure when you're shopping, especially in an environment like now where we're seeing rates moving, make sure you're shopping at the same time. Compare apples to apples. And last week we had oranges if you're comparing that to today's apples. So
if I'm shopping, I'm literally typing 3 emails to these people and saying, you have 15 minutes to reply. I understand the market moves quickly. I need to see something that you could pull the trigger on now, please. And get them all within that quick, succinct. Nothing's too quick. Like, you want it as close as possible together, because an hour difference in this type of market, how many intraday price changes up, down, all around, and then back up again have we seen over the last 2 weeks?
Yeah. And people, for those of you that may not know what we mean by that, it's not like the price of gas. There's actually a law that the price of gas, once a gas station sets the price of gas for the day, it has to stay that way till the next day. Did you know that was a law?
I didn't actually know that was a law. I know that there's some sort of weird thing, like they can only sell this much more of a percentage next year of the gas that they sold this year on this kind of day or week period, I think also.
That one I don't know, but I do know they're not allowed to change the price of gas during the day. I found that after 9/11, actually, when we were
I wonder if that's true. I don't know. Like, I feel like they change it multiple times a day, especially here lately. Good night.
I was going to say, not anywhere I've seen. We'll check into that. But when it looks to mortgage rates do absolutely change during the day, because they're based on a live moving market issue, which is bonds. They're based on mortgage-backed securities. It's a type of bond that's traded on the bond market. And as that trading goes well, you get a little bit better mortgage rate and a little bit better mortgage pricing. And as that trading doesn't go so well, you're going to be paying a little bit more. So that's kind of how we see that move through the day. And it's important that you've got somebody to help you stay abreast and stay aware of that. And don't get too frustrated, is the thing Christopher and I are trying to tell you all, is, when you're looking at getting a loan and you're looking at buying a home, right now we're seeing enough of a rate movement that, it might affect how much house you can afford. And that's going to be frustrating. When you might have been looking a year ago or 6 months ago compared to now, we've seen some pretty significant rate movements, up to a half a point or maybe even 3/4 of a point in some scenarios. And that can affect your payment and your affordability. But once you're past that kind of a time frame, as far as this week or next week, a lot of times what you may be saying to yourself is, Hammer, I don't want to buy a house now and lock in that mortgage rate and then rates drop down. And what I'm here to tell you is, you don't have to worry about that. As good or as bad as you want to look at it, it's not likely that rates are going to be dropping down anytime soon. When we look over the next few weeks, heading into that March Fed meeting,
trying to time the hot potato game when you're doing it with a firecracker with your friends. When you're the guy that's trying to time it to toss it just right, you know how it works. I played this game. I don't know if any of y'all have, but you know how it normally works out? It doesn't. Because there's a period of time where that fuse is down in there and you can't see it. And that gap is not always the same. So just saying, don't hold on to it and hold on to this hope of saving 1/8% in an interest rate, or some, which isn't exceptionally likely, or some small margin. Like, take your shot when you get it, even if it might not be the perfect one that you thought or had hoped or planned for. Like, The last thing you want to see is it run off, right? Any hunters out there? I guess they're all vets, so that flies.
I'll tell you, and I agree with you, but there's also times where I would argue with you and say, Christopher, I can't agree with you right now. Rates are improving, and here's why. And holding off could benefit. And
Well,
there's
sure.
times when
No,
that's there, but that's not now. That's not now.
I
is
would
the
agree
thing
with
that
you.
everybody, yeah.
But
You know,
even in a purchase market, I've seen a lot of
Mhm.
people, for the hope of saving out for that final thing that they'd hoped for, put themselves in a position where now they've extended their
Yeah.
closing turn time and what was gained in the process. So you're absolutely valid on that. And that's why we have people like yourself on here to tell us what's going on, because none of us are all the smartest, right? No one has a crystal ball, just like the user said, right? Take it what you can get, especially when you're buying a house, because acquisition is that important. An eighth of a percent or a small margin for credit
Right.
isn't as important as that acquisition, right? And the cost is always going to be somewhat variable. But Hammer, are we even, like with current rates where they are today, are they even at the highest point that we've seen them over the last 3 years?
They are just now. I mean, I have to go back and look to pre-pandemic. I remember when I bought my house in 2017, I was at 4.125, and that's about where we're at. So, it's still a little lower for some people, for sure, depending on the scenario and what they're doing.
Point
But
being,
high
the
threes,
sky
low
ain't
fours is a
falling.
fantastic rate. My first, I told you my story before. My first condo, 11.5% interest rate. And it was the best mortgage that I ever got. That condo gave me a lot of equity growth in 2 years in a
Hey,
market like this one.
let's try something. How many veterans are watching this right now that have paid over 11% for an auto loan outside the front gate? Just if you have, no shame. But to say, when you find value in a thing, even when there's costs to it, that thing becomes valuable. Now, you shouldn't overpay. The car financing one's a bit of a joke there, but you're not in a situation, the sky's not falling with mortgage rates. Yes, it's going to impact you. Yes, it may reduce what you can qualify some, but it's not falling. A little bit of clouds coming through, but it's not even as bad as it's been.
As I say, and only if you really compare it to 6 months ago, it
We're
really
getting multiple
even
people saying guilty. I found
yeah,
some of y'all.
people
I
have done
see
that,
you.
right? So,
Yeah.
but I'll tell you the reason though that now you want to look at locking in an interest rate, because what we're looking at, again, nobody's got a crystal ball, but we do at least have some factors that we can calculate some odds, and when the odds are in our favor that things could improve, or the odds are against us and things will probably not improve. And right now, what we're looking at are the odds that rates are going to continue to move up. And Christopher, you kind of hit that that nail on the head before when you said, what if the Fed raises their Fed funds rate, which is their way of trying to slow down the economy, slow down inflation? But what happens if inflation is just a genie that's not ready to go back in the bottle yet? So now we'll have rising rates and inflation.
And employers there are a lot of jobs out there, a lot of jobs. Most people, I've got a good friend here that owns an auto body place, pays really well, and he can't find people that want to work, right? Well, why is that? What happens if the jobs market stays strong? Businesses are still wanting to grow. There's not enough liquidity. The economy does slow down and no one gets in front of inflation. Like, those are the things that we really, I think, need to be concerned with as far as how we're thinking. I think we need to have a longer thought process to what's going on and what we should be concerned most with. And I think it's hard to, a lot of the time, when you're not super experienced in this. Like, all you hear is literally everyone on Facebook, oh, the interest rates just went up again. Oh, the interest, like, some of the professionals need to chill out a little bit with that. I don't post any of that stuff anymore, because what I found is it doesn't inform, it excites fear. And that's why so much engagement comes in around it. It makes me just like the media. Fear or drama sells. And this doesn't need to be dramatic. You don't need to be fearful about it. Like, every minute change doesn't represent your hopes and dreams lessening at all. Like, at all. Decide you want to do a thing, get in front of it, put a plan together, take time to think, save, invest, and then take the shot when it's time, because it's worth it. Period. End of story. It's worth it.
Do you know what one of the best vehicles against inflation is?
Yeah, a house.
A house, absolutely, is a house.
And ammo. I'm
and a used car right now.
I'm sitting on some 9mm rounds that we got together for summer camp last year. In case y'all don't know, every year we have an annual event with all of the professionals that it takes to moderate this community, to be present when you ask a question. Each time the question's asked, even if it's a question that's been answered 100 times, they are going to find you where you are and speak to you to make sure you have the opportunity to ask, to be in a dialogue, to learn the way that you need to, because each person is different. But we get them together once a year. And they're mortgage and real estate type people. And so we bring them to Texas in July. We put them out in a field in the sun for 4 or 5 hours, 8 hours a day shooting guns. We go out to the lake. We do a lot of things to focus on our community. There's probably 150, 160 of them now. I know a lot of you are in different groups, and there are many groups, many like this one, but this one is ours. We do it a little bit differently because we want to encounter you differently, and we want you to have trust in us. So we try to give plenty of activity and action so that you can see why you can trust us and how we engage you. And it takes a lot of time and effort from these professionals to be here to do those things. And they don't do it. And we don't care if you choose to work with any of them. That wasn't even what the map was originally created for. The map was created because I knew many of you would have really important questions you needed a specific audience for, with a type of information that needed to be shared. And we didn't want to control your relationship and access to those people. We thought we'd make it valuable or present and visible as far as who we've vetted or who we have in a process of vetting through testing, education, encountering you here, and tracking every single piece of data that shows me everything that they do. Because we want to make certain trust but verify isn't just some catchy slogan, ladies and gentlemen. It's what we do. But we bring them all together for this event. Long story, back around to the original thing. So I'm sitting on around, I don't know, like a whole bunch of 9mm and 22 that I got for a steal with, I'm just saying, like, lots of things are hedges against inflation, to your original point 5 minutes ago. Sorry for that one.
That's all right. Now I'm trying to see where this question came from so I could see who said it. Facebook user, because I don't see the name. It says, I'm less concerned about rates around 4 to 6%. I'm more concerned about lack of inventory. Purchasers and those who refinanced over the last 2 years will have every motivation to not sell their homes or loans. This will contribute to a lack of inventory in the next 3 to 6 years. One thing I want to stress, anybody that's been out house hunting, they feel that lack of inventory. But it's really important that you understand something about the lack of inventory. The reason there's a lack of inventory is the speed of turnover. So there were more homes sold in 2021 than since 2006, which was another high point in the market. All right. So there were actually more transactions. However, the speed of those transactions, a home goes on the market, it's very, very quickly, just snatched up. There's bidding wars. Everybody's seen this, right? And that's why it's gone. And then the next one takes its place and immediately, boom, it's gone. These things are coming up very quickly. It's not that houses are not coming onto the market. It's that they're not sitting.
There's more buyers.
Yeah, there's a huge buyer demand. So the concern about a lack of inventory because people not putting their, not selling homes, it's like anything else. There's always a reason for somebody to be selling a home. Either they've had a change of life experience, or they're moving, or they're upsizing or downsizing. The inventory is going to continue to do what it has done. And it's the demand, which is huge, and it's not going anywhere. Even as rates creep up, it may help some of you that are looking for homes. Maybe there'll be a little less bidding in there. Maybe you'll get an offer accepted that.
Well, a lot of people are going to be shell shocked and slow down anyways, and so it may help a little bit. But the other thing that doesn't account for,
don't be that
no,
person.
don't be that
Go
person.
on.
Like, you don't know. Yeah, you ain't first, you're last, kind of a thing. Like, I guess, unless it's anyway, I'm not going to go too far. That one. But the other thing it doesn't account for are the new builds that are going into markets that are growing. Mm-hmm. I think it's important for people to understand things change, especially in real estate. All real estate markets move kind of on their own in different ways, right? And so always be looking of a place to move to. Look for a new opportunity, even if it's in your same town, even if it's outside of town, even if it's into town. Like, whatever those reasons are, like you said, they're going to occur. But don't be afraid and don't worry about the change. Just try to get ahead of it. Look where they're going, because there are markets and new builds like mine,
yes,
where they're announcing and starting houses daily. The part of the problem is with the inflation that's present, with the short supply on certain products caused by disruptions to production in the supply chain, like lumber, like windows, like appliances, right? There are certain things that are driving costs up that have nothing to do with the monetary policy necessarily either. And so as builders continue to build and put more product on the market, as they are, and just for the record too, they're not outpacing unsustainable growth. Even if you look back at 2008 or 6, rather,
not even
make
close.
A point around it, they're not building. And like the same with autos. Do you think they're ever going to stock car lots the way they used to? I bet you they don't. I bet you they don't. I bet you there's some like test models there, like the house models, right? And then you order your car. So only to say that they've learned their lesson. They're not going to put them in a position where the last decade that they finally made up from the mistakes before, that they're going to lose everything all over again, because builders were destroyed back then. And so while they're bringing on supply as quickly as they're able, they're also very personally, individually cognizant of not overextending themselves like they have in the past.
Well, I'll tell you, one thing that doesn't get a lot of credit is the internet. And the internet has changed the housing and the jobs industries, because people like my daughter, she can work, instead of being in New York City, she's in Manhattan. They're looking at buying a house in the next year, and they're looking at places all across the US because they can work remotely. And there's a lot of jobs you can't work remotely, but yet again, there's a lot of jobs you can. And that's one of the changes that COVID made, is it made working remotely much more acceptable, and it sped that process up. So that opens up, more places to build, which is a great thing. And that's, we're seeing the effect of that already, where there's Boise, Idaho, or like you mentioned, in Texas. Texas had a huge increase in population, over the last few years.
And I'm just going to say, those of you, if you're any of you on here that followed me 4 or 5 years ago in those groups, when I told you what I thought was going to occur and why I thought it was going to occur, I didn't see COVID as the catalyst to push it further, but technology would always be the revolution that fulfilled the thing the Industrial Revolution sought to. It couldn't reach to every place, and it couldn't sustain every piece. And now I think what happens is technology allows growth to occur in places that never really had the opportunity before, because it considers each individual and their jobs now that can be remote. Like, so people are spreading out, man. People are going places everywhere right now. Big movements. Like, I have friends in the industry, they're like, I just moved to Massachusetts. I'm like, why, Matt? And they're like, I don't know. It was just a place we always wanted to live. So we figured, like, so people are getting to choose the things that they want to in this area. And that's going to impact what grows, where it grows, how it grows. And it's really cool. It's going to bring a lot of things to small towns near you that have never been there before. And there'll be some people that are like, no, we don't want our town to. You can't stop an iceberg, folks, or glacier, I guess.
I get that a lot of where I live. People are like, oh, it's not like it used to be. And we're like, no, it's not.
I'm in Texas. Like, who's moving to Texas faster than anyone right now? California. So all you Texas out there and all you Californians, here's what I want to say. Love y'all, man. Like, come chase your dreams. You want to live here, move here. Like, every place is a little bit different. And the one thing I think with me in the military that I learned to appreciate is I became kind of a part of the place and experienced things differently, thought about things differently, and valued things differently in every place, regardless of where that is. So I know some of you Texans aren't hip with all the people that are moving down here. Most of them are going to Austin. Maybe that's fun. Austin was already weird. We all know that as Texans. But it's probably a good thing that our country right now begins to learn how to have neighborhoods that look different with different types of people in them, and begin to work through some of those problems, because they're not getting it done on Facebook. Like, ouch. They can't even talk to each other hardly at all most of the time.
Well, Christopher, we could sit and chat all afternoon, but I know we're getting close to that a half hour. I just want to give a bit of a recap, if that's all right with you. We'll just talk.
Please do.
All right. So quick recap is rates last week went up, and we talked a little bit about why. And more importantly is, where do we think rates are going from here? They're going to be about the same and get a little bit worse. They're going to continue to get worse from here. They're not likely at all to get better. Any bit of better that we do see is going to come from one source generally, and it's going to be from the Ukraine-Russia conflict. If there is an actual situation where Russia does invade Ukraine, or that situation escalates, we could see mortgage rates get a very, very small window. Again, not a big improvement. We're not going to see rates drop, but you'll see where maybe we don't get as much pressure where rates are creeping higher. Otherwise, right now, with the Fed taking action in inflation, that's causing rates to creep up, and it doesn't look like we're quite done there yet. So, don't be afraid don't hold off because you're trying to get the rates from last year, and you don't want January and February's rates. You want August's rates, and those you're going to wait. Don't wait, because it'll probably bite you in the, well, you know how that one ends. So
just so you know, like, there are, I guarantee, more than a few Marines in here, active duty probably, that heard what you just said, which was totally about rates and what could occur there. But what they heard was conflict with
Russia.
Ukraine. They're like, wait. You mean peacetime Marine Corps is almost over again? Peacetime Marine Corps, guys. Like, I don't know how you do it. Blessings to you. Avoid those NJPs. It ain't worth it. Listen to your first sergeant. He cares about you most of the time. Not all the time, they do, right? But I guarantee you at least more than one Marine hears this and thinks that probably. I would bet money on it. Kind of like I got a couple of them with a car comment. Brandy even. Sorry, Brandy. That was a little closer to home than I thought it would be. But I did have a 2006 06 or R6 motorcycle that I had. I thought was financed differently, but it was on 2 credit cards for like 14%. So I got me with it too, guys. Don't feel bad about it. Up at
It's
Britt Motorsports, just outside of Lejeune.
It's funny that you said that because I just got my title in the mail today.
Nice,
The car.
nice. Work on bettering your debt. Don't just necessarily think about how to avoid it and all those things. But thanks for the recap, Hammer. Thanks for y'all's time for being on here today. As always, if you have any questions, drop them in the comments section. I'm certain that we'll have a moderator around very quickly to answer any of the questions that you have. And for the love of God, shop, guys, gals, shop. That's the fastest thing that you can do to make certain that you understand all of the options available to you.
Yep.
Blessings, y'all.
Thanks. Take care, everybody.